I'm gonna hit record on this computer, so it's at least recording.
You're recording, okay. As a preliminary matter, this is Evelyn Piness, Madam Chair of the Board of Contributory Retirement System. Permit me to confirm that all members and persons anticipated on the agenda are present and can hear me. Mr. Merles,
Yes.
Mr. Papetti,
Yes.
Ms. Zincata.
Yes.
Mr. Krowicki. Can John hear us?
I believe he can, but I can ask him to unmute sometimes.
Hello, can you hear me?
Yeah, we can hear you, John.
Okay,
Yeah, I'm
All right.
on the big computer and only audio. I don't know why it keeps cutting out.
Mute himself.
okay, Mr. Call?
Yes, present.
Ms. Milch? Okay, we also have with us today to report on the PRIM, Mr. Paul Tedesco.
Good morning, everyone.
Good morning.
Morning.
Ms. Green
Morning.
and Mr. Danielle.
Good morning.
Good morning. This open meeting of the Needham Retirement Board is being conducted remotely, consistent with Governor Baker's executive order of March 12, 2020. Due to the current state of emergency in the Commonwealth due to the outbreak of COVID-19 virus. In order to mitigate the transmission of the COVID-19 virus, we have been advised and directed by the Commonwealth to suspend public gatherings, and as such, the governor's order suspends the requirement of the open meeting law to have all meetings in a publicly accessible physical location. Further, all members of public bodies are allowed and encouraged to participate remotely. The order allows public bodies to meet entirely remotely so long as reasonable public access is afforded so that the public can follow along with the deliberations of the meeting. The public is encouraged to follow along using the posted agenda unless the chair notes otherwise. Ensuring public access does not ensure public participation unless such participation is required by law. The meeting will not feature public comment. For this meeting, the Needham Retirement Board is convening via Zoom app as posted on the town's website, identifying how the public may join. Please note the meeting is being recorded and that some attendees are participating by video conference. Accordingly, please be aware that other folks will be able to see you and take care not to screen share your computer. Anything you broadcast may be captured by the recording. We're now turning to the first item on the agenda. Before we do so, permit me to cover some ground rules for effective and clear conduct of our business and to ensure accurate meeting minutes. I will introduce each speaker on the agenda. After they conclude their remarks, the chair will go down the line of members, inviting each by name to provide any comment, questions, or motions. Please hold until your name is called. Further, remember to mute your phone or computer when you are not speaking. Remember to speak clearly and in a way that helps generate accurate minutes. For any response, please wait until the chair yields the floor to you and state your name before speaking. Finally, each vote at this meeting will be taken by roll call vote. So, rather than having Mr. Tedesco and Ms. Green and Mr. Daniele sit through our whole meeting, which I'm sure you really are looking forward to, I will move them to the first order of business on the agenda. So, Paul, take it away.
Thank you, Madam Chair. And what I'd like to do is say hello, first of all, to all of you. Sorry we can't be there in person and see you face to face, but this is obviously the reality we've been living with the last year. I can't believe it's been a year. But you know, what I'd like to do is have Francesco start things off and we'll proceed from there.
Great. Thanks, Paul. Thank you, everyone. Good morning. And as you said, if everyone can keep themselves on mute, that'd be much appreciated to avoid some of the background noise. So today, just to frame the conversation, I'm going to be covering markets, provide an organizational update, which is a little longer today, while Emily will be covering the critical asset allocation changes, and Paul's going to be bringing it home with performance. But before I get started, I realized that we had a meeting on January 13th to discuss expenses, and I know Jake has asked for a subsequent breakdown of those. Thank you for your patience. We are working on that breakdown. and I expect to get you that communication shortly. As you are aware, the Needham Retirement Board pays their pro rata share of expenses like every other system. You are aware that we received the GFOA Certificate of Achievement for Excellence in Reporting, as well as being GIPS compliant. Also, just a side note, your auditor recently submitted a request that's actually not applicable to you folks, and I'll be reaching out shortly to your auditor to discuss that. And it revolves around BNY Mellon and SOC 1 and level 1 and 2 reporting. But before I jump into markets, I'm going to pass it back over to Paul with an announcement.
Let me unmute. Yeah, I just wanted to let you all know, if you haven't heard already, that I'm going to be retiring from Prim at the end of this month. Yep, end of this month. And yeah, after all these years, Evie, we've been there since the beginning.
God, Paul, what am I gonna do?
Well, I wouldn't have left if I didn't think that the client services team would be in great hands. As you know, we started to add folks to the team about 5 years ago, and Francesco and Emily will obviously continue to provide you with that great service. We'll also, and we're not ready to make the announcement yet, but we have a person who's accepted an offer to be a senior client services officer as well. This person will be working with Francesco and Emily. And I never have felt better about, this decision, knowing that the client services group will be in great shape and will be able to continue the level of service we've had all these years. I know we've had a lot of bumps and ups and downs along the way, but I think the long-term experience that you've had with Prim and most recently with the town's OPEB funds have really, paid off, literally. So I will miss you all, look forward maybe sometime in the future of, seeing you in person or at some event or some conference. It's hard to get this out of your blood when it's been in you for a long time. But we wanted to just start out with that and just let you know what the plans are. So thank you all very much.
I just want to say, take a minute to thank Paul, because I think we go back to the beginning of time.
Yes.
You and I, and it's just been a long time. And I remember when I think it was just you and two others that were in the office starting all of this. And like you said, it's been a bumpy road, but it's been fun. It's been challenging. We've had a lot of good times at conferences. It's just been, you've always looked out for Needham. You've always listened to me when I complain about timber, that I still don't like timber, but anyway, we've been through a lot together, and Paul, I'll never really forget you and the times we had, and how you've helped me personally get through a lot of stuff with the Needham board and the board members in the past. So I want to just say a special thank you from me. And
Thank you, Evie. That means
it's
so
been
much.
It's got to be 40 years.
Getting on there. Yep. 1985
Yeah.
Was when Needham came in, and I started at Prim in 84. So you were among the first intrepid systems to make that decision. It was a courageous one back then.
I think we're the second system to join.
Yes, you were. Yes. It's just been an amazing ride over these years. Just so many memories come flooding back, and good ones, really good ones. And thank you, Evie. Those are very wonderful comments, and I appreciate it very much. Thank you. Feelings are mutual.
Well, thank you, everyone. Just so you're all aware, I'm not going to be learning to play an instrument. So I won't be able to come down to any conferences and entertain as Paul has done over the years. I apologize. I may be able to learn how to play the tambourine, but that may be a stretch. So let me jump into markets. As you folks know, or maybe aware, Prim reached a new all-time high of $87 billion under management. Who would have guessed in March of last year that now a year later, we would be, that the market would have corrected and ran so hot for such a long time. Keeping in mind the 6-month return ending 12/31 of 16.6% is the largest return in Prim's history, going all the way back to when Paul started, beating a high of 15.7% back in June of '86. So that is the strongest performance on a gross basis. But when we actually look on a net basis of 388 basis points, almost 4%, is really remarkable. That return is also, on a relative basis, the strongest in Prim's history. But we do want to keep things in perspective in light of COVID, the pandemic, the lagging effects, which are still not really known of how it's going to impact the global economy that used to be so correlated to each other. So many folks have been left behind in this market. And if we think about it, 10 million people are unemployed. So many folks have been left behind, disenfranchised. We all drive through our downtowns, and we know even here in downtown Boston, just looking out the window, I can see how many storefronts do not appear to be returning or coming back soon. So markets sometimes don't react in a logical manner to what's happening in the real economy. And we monitor this disconnect very, very closely. And we're trying to do our part for your beneficiaries and the 300,000 beneficiaries that Prim supports through our efforts. So we think that the performance is a shot in the arm to pension security in this time of struggle and uncertainty. Before I jump to an organizational update, any questions on markets? Great. So when most recently, you may have heard there's been some legislation that has passed and the bill's gone into law, signed by the governor on January 14th. And thanks to Treasurer Goldberg for her vision and her tenacity. The bill is an act enabling partnerships for growth. And this bill will focus on diversity initiatives that Prim has been focusing on for quite some time. The goal of the law is to increase diversity of investment managers, contract and vendors, to be diverse for at least 20% of those. And those increases will be for women, minorities, disabled managers, and business partners. I congratulate Treasurer Goldberg. That was a very big effort on her behalf. And Prim is also continuing to do work in line with this that we've been doing for quite some time. David Gertz, our Deputy Chief Investment Officer, will be leading that effort. 5 years ago, we had about $1 billion of AUM with diverse and owned managers, and now we're close to $5 billion. PCS, Portfolio Completion Strategies, has about $1.4 billion, or 18% of its AUM with diverse managers. Private equity invests about $1.2 billion, or nearly 11% of its AUM with diverse managers. So we're making progress, but there's lots to do. Switching gears to our investment committee, Phil Perlmutter was nominated by Treasurer Goldberg to join the Prim Investment Committee and was ratified by the board. One of the things that I've always been impressed with Prim is the folks that we get to volunteer to be in our board and committees. And if you look at Phil, he's had 25 years at Wellington Management. 11 of those, he was one of the firm's 3 managing partners, in addition to other roles as portfolio manager, director of investment research, and head of EMA during a 5-year assignment in London. Phil graduated magna cum laude from Princeton University and has an MBA from the Harvard Business School. He's done many projects such as the community, being an advisor for the Community of Boston Latino Legacy Fund, and currently serves on the national board of the Posse Foundation. He's the son of Cuban immigrants and was born and raised in Little Havana of Miami, Florida. An additional organizational update, Michael Bailey, Senior Investment Officer and Director of Private Equity, has left Prim effective January 29th of this year. He's joining Fidelity Investments. We really wish Mike well in his new position, and we've been very grateful for all of his work to Prim and for the Commonwealth. Prim had very strong contributors over the years, but no one like Mike, truly exceptional. He joined 8 years ago, cemented his legacy as developing Prim's top-notch private equity portfolio in the country. He's been a great role model here for all of us at Prim, and he'll be sorely missed. As you've heard us discuss in the past, we remind folks that we're always looking to deepen the benches of the different teams. And fortunately, within the private equity team, Michael McGurr, who has a CFA, is a senior investment officer, and he's been promoted to be the director of private equity after nearly 7 outstanding years on the team reporting to Mike Bailey. This was a very easy choice for Michael Trotsky, and we are very fortunate to have such a strong team member to take over and ensure that continuity. Michael has been consistently one of the highest performing and most valued employees at Prim. He's highly respected by his colleagues and the entire private equity industry. Michael McGurr has led the team and built vigorous, consistent investment processes to guide portfolio equity construction and manager selection. In addition to those responsibilities, sourcing new ideas, he does manage a team. Sarah Zatuni and Eliza Hayes were both analysts, and he mentored several Prim interns during summers. But prior to Michael McGurr joining Prim, he was at Bain Capital, where he was an investment manager. And prior to Bain Capital, Michael was at the Minnesota State Minnesota State Board of Investment, where he was a portfolio manager of alternative investments with a portfolio of $9 billion. After graduating with a Bachelor's of Science from the University of Richmond, Michael began a career as a professional baseball player. He later returned, received an MBA from the Johnson Graduate School of Management at Cornell University. Michael is a CFA charter holder, member of the Boston Securities Analyst Society, a member of ILPA, and in 2018, Treasurer Goldberg awarded Michael the Commonwealth Citation for outstanding performance. So we're truly appreciative, and we have a very strong and deep team, as Paul mentioned, and it's one of the things that the board has asked us to do going back several cycles, was continue to deepen the benches across Prim. In doing so, Shannon Erickson joined the risk team as a senior investment officer. Shannon brings a ton of experience, over 20 years in the investment business, 15 years at LMCG as a quantitative portfolio manager and developed international and emerging equity markets. Prior to that, she was an international equities analyst at Evergreen and at Independence International Associates. She has a Bachelor's of Science from Bentley College, as well as an MBA, and she is also a CFA charter holder. I'm going to take a quick gasp of air before I switch to performance for Paul. So Paul, would you like me to share the slides, or I think folks may have them, but I'm happy to put them on the screen for you.
I'm sorry, that would be great if you don't mind. I'd love
No
that.
problem, my pleasure.
All right. As
Oh,
soon as you get those.
The host has to able me to share the screen, if that's okay.
Sorry about that. Let's see. Sandy's kind of my techie Zoom guru. How do I do that, Sandy?
Sandy, on Zoom.
I got it. Thank you. Okay, at the bottom, you see your icons. You see share screen.
Let's see. I see at the bottom. Share screen. Yep, I see it.
All right, you see where it's, all right, let's go over to participants. Click on your participant screen, okay?
Yep.
And then down at the bottom, trying to remember how to, I don't know how you've got this configured.
Actually,
Under share screen does say multiple participants can
Wait,
share.
okay, yes.
You want me to try that?
Yep.
Okay, let me see. Francesca, try to do it now.
okay. And actually, I jumped the gun. I went to Paul, but I
There you
skipped
go.
Emily. So I apologize. We need to switch gears and go back to asset allocation. Sorry,
Thank
Paul.
No, that's fine. That's what I was going to do. I was going to turn it over to Emily.
Great, thank you. So on February 24th, the board voted on the PRIT asset allocation recommendation, which you can see here on the screen. Really no major changes to last year's asset allocation. The minor changes that I'll highlight include a 1% increase to the private equity target range. So moving from a prior range of 10 to 16% of the PRIT fund to 11 to 17% of the PRIT fund, and then a 1% decrease in the allocation target range for portfolio completion strategies, going from 8 to 14% of the PRIT fund to 7 to 13% of the PRIT fund. And just to kind of go into a little bit more explanation on those changes, the small increase in the private equity target range is really aligned with the multi-year effort to slowly increase the allocation to private equity. And then the decrease in the portfolio completion strategies range reflects the practical challenge of just allocating capital to this asset class. And I'm sure you've heard from Paul and Francesco in the past on this, but just as a reminder, the PRIT fund asset allocation strategy is really strategic. It's built for the long term. We don't believe in tactical or short-term allocation, and the PRIT fund is constructed to perform well in both up and down markets. So that is a brief overview of the changes, minor changes that we made to asset allocation. And with that, I will take any questions or turn it over to Paul for performance.
Okay, thank you, Emily. If we could just get started on, well, yeah, start with 7, right there, 18, that's perfect. You know, as Francesco noted, the fund hit 87 billion at the end of December, which is a high watermark for PRIT. And really 2020 has been a tale of two markets in terms of what we experienced in the March quarter and the rebound since March. It's been an extraordinary period. But again, keeping in mind the fact that the real economy does not reflect what's been going on in the markets. And hopefully now with the stimulus package being approved or about to be approved in the House, that it will give a much needed boost to the economy and also in tackling other challenges posed by COVID-19. But on slide 18, you can see the 1-year return of the fund at 12.6%. That's gross of fees. We returned 12.1% net of fees, and still pretty substantially above the benchmark return, the core benchmark return of 10.8%. So that's, you know, that's 180 basis points above the benchmark on a gross basis. On a net basis, it's 132 basis points ahead of the benchmark. And for the year 2020, we had an investment gain at 12.6%, or I should say 12.1%, because I'm going to give you a net of fees number. That investment gain net of fees was 9.6 billion. And it was also $1 billion of value above the benchmark. That's due to the overperformance, also net of fees. And, you know, during this time, we were also paying out benefits to the tune of $1.5 billion. So it's really a remarkable year. Francesco said, who would have thought back in March, in those very dark days, that we'd end up the way we did in 2020, and also, you know, have a vaccine available. Or vaccines, I should say. So it was an extraordinary year. You can see the 3, the 5, and the 10-year periods all are very strong on a relative and on an absolute basis. If we could go to the next slide, please. This is the quarterly return of the fund ending. This is the December 31 quarter. And, you know, again, it was a very strong year for the equity markets, specifically our U.S. small and SMID. And what SMID is small and mid capitalization sized equities were our best performer, followed by emerging market equities. This is for the quarter. Developed international equities also performed well, as did large cap equities. And you can see private equity for the quarter had a very strong 11.5% return. The PRIT fund there in gold was up 9.8% for the quarter, another strong quarter. And as we go down the row here, you can see that the least performance came in during the quarter with US strips, which is our long duration bond portfolio, as yields started to tick up a bit in the fourth quarter and continue to tick up to date. If we go to the next slide, 20, you'll see the 1-year return of the PRIT fund asset classes. Again, in gold is the 12.6% return. But look at where strips are. Long duration bonds did very well in 2020, up 24%, just trailing the US small SMID equity returns and private equity. Of course, US large cap equity, that's really our large cap portfolio is a passive index, an S&P 500 index. So what you're looking at there is the S&P 500 return for the year. And, you can see as we go down the line, the least performer, the contributor was portfolio completion strategies. Keep in mind, about 80% of that portfolio consists of our hedge funds. The remainder of that portfolio consists of real assets, such as agricultural investments, aviation, aggregates, which is sand and gravel. And also, you can see right to the left of that, real estate. Real estate was up 1.1%, but it was the REITs within that portfolio, the publicly traded REITs, that really were the underperformer. But our private real estate, even under the circumstances right now and what's going on in the world, and obviously the office sector has gotten pretty hard hit during this past year. Fortunately, Prim's portfolio has a lower weighting to apartments to offices than the benchmark. So we actually benefited from our underweight to office. And I can get into more detail on that as we go along. If we go to the next slide, you can see global equities. We had a great year. Global equities, the total of these different categories you see here comprise about 43% of the fund at the end of 2020, again, within our target range of 34 to 44% of the fund, as Emily just showed you in the previous slide. And it was a very volatile year, obviously, and the global equity as a whole returned 15.9% and 15.7% net. So it did, as a whole, outperform its benchmark. But if we just break it down, again, you can see the U.S. small and SMID cap portfolio performed very well versus its benchmark, over 4% of value added to the portfolio due to the outperformance. That outperformance was mainly attributable to a new category we have within this sub-asset class called micro-cap. The micro-cap managers, that's the smallest of the small in the capitalization structure of equities, and it did perform very, very well. And emerging markets also had a pretty strong year, following a couple of bad years in the emerging markets area. But we had very strong performance. Again, our managers, our emerging markets managers performed very well. The two top performers in this group were Billy Gifford and Dreyhouse. And we had some outstanding performance there. Again, the small cap managers in this category also outperformed. You can see a trend here. Small cap in the US, small cap in emerging markets also were strong performers. As I said, US large cap, there's nothing more I can say about that, except, as I just mentioned, passively managed. We had the tracking error there, slightly in our favor, but it's really just an index fund, and it mimics the return of the S&P 500, which was 18.6. We had a 19% return. Now with international developed markets, you can see up 11.7. Again, very strong performance versus the benchmark. Also in this group, Bailey Gifford, growth manager that we have in this category, outperformed its own benchmark of by almost 20%. So very strong performance there for our international managers. And just to give you an idea, this portfolio is 60% active, 40% passive. So the fact that we beat that benchmark as strongly as we did shows the great performance of our active managers. I should just to go back, the emerging markets is 100% actively managed. Finally, that last category, domestic enhanced, that's only 1% of the fund. And that little portfolio resides in our domestic equity portfolio. It's there as the theory behind it is that when equity markets go down, we're supposed to be offset by this domestic enhanced. That strategy at the first quarter of this year didn't really work. Because of the kind of volatility that we had, the portfolio wasn't designed to I guess, meet the situation, if you will, in terms of the type of volatility we had. So it did lag in the first quarter and through the second quarter, but has come back in the fourth quarter. If we go back, I won't go back a couple of slides, but you can see domestic enhanced was one of our better performance for the quarter. So if we go to fixed income, again, those 20-year strips, very strong performance there. That again is kind of like a passively managed fund. So 24%, we just met the benchmark there. Remember, in 2020, interest rate sensitive bonds outperformed those that were more non-interest rate sensitive. So your long duration bonds, your TIPS, and our core fixed income, which follows the aggregate index, also did very well. High yield bonds, perform well versus its benchmark. Our other credit opportunities, this is kind of a little bit of a different portfolio. It's a relatively new portfolio that we put into place a couple of years ago. It's very early on. These are private, private fixed income investments, and they were up 7.7%, way above their benchmark for the year. Kind of a very early strong return in that category. Emerging market debt, although positive, did trail its benchmark. That's due to one manager, Ashmore, who that manager has been underperforming. Short-term fixed income, another brand new portfolio within fixed income, was up 3.2%, and then bank loans slightly trailed its benchmark, but still was positive for the year. Next slide, please. This is the slide of the quilt, what we call the quilt map, and it shows the 1, 3, 5, and 10-year returns of the fund. We just discussed the 1 year, so I'll just refer mostly to 3, 5, and 10, and you can see what drives our fund is private equity. And because we have a dual objective for our asset allocation of achieving a 7.15% return, and also a safeguard, if you will, of not having the fund drop more than 20%, you can see why we've increased by 1% the target range for private equity. It's been a very strong performer, will continue to perform well for us, I believe, in the years to come. And under the stewardship now of Mike McGurr as the new director of private equity and his team, we've got a lot of exciting things coming up for this calendar year, a lot of new opportunities in this portfolio. And just to give you an example, I'm just going to give you one example of a private equity investment that really paid off for us in the last several years, and it's our investment in Moderna. We were one of the first investors through Pioneer, which is a venture capital fund here in Massachusetts, invested in Moderna early on, and now it's out there trying to save the world. So you also, as an investor in the PRIT fund, contributed to that as well. So we're very happy about that. You can see the global equity, because of its most recent performance and over the last couple of years, still performing well. Keep in mind, global equity is our most volatile asset class. So at different points in time, depending what's going on in the market, that global equity block is going to, trade places with other asset classes in this quilt. Core fixed income, basically an anchor to windward, performing well for us, doing its job. Real estate, over the 10-year period, still very strong at 9.7. The 3 and 5 year period impacted by what went on this year. And down, and this timber, I know, Evie, that's your favorite asset class. It actually, performed reasonably well for the 1 year. But you can see the 3 and the 5 and the 10-year period still, kind of in recovery mode since the global financial crisis back in 2008. But, we're seeing a lot of construction, a lot of building, a lot of housing starts, and, actually our international investments in timber in Australia and in New Zealand did very well. So, there are some bright lights within that portfolio. And as I said, the hedge funds make up 80% of that portfolio completion strategies. And, hedge funds have had a tough year in 2020. I mean, we use hedge funds really literally as a hedge against equities. So most of our hedge funds are what they call relative value, which are more credit oriented, very little equity exposure there. And, we also have some emerging market debt in there as well. And that was the worst performer in that category. And it brought those returns, although positive, muted returns in that asset class. So I will go to, if you could just go back, I just want to point out that, we just did our, and distributed to you our 2000 fiscal 2020 comprehensive annual financial report, or just annual report. We just learned that the GFOA now does not want you to refer to these reports as CAFRs. You've got to strike that from your websites or anything when you're referring to comprehensive annual financial reports. You can call them the annual report or use the full name. So I'm not going to use that acronym anymore. But you can see our total expenses were 51 basis points. And I know that the fees have been a very, a subject for this board that you've kept a close eye on, and you've done your due diligence on and continue to do your due diligence on. But I think it's pretty encouraging to see in fiscal 2020, we actually went down 1 basis point of fees. And as Michael Trotsky often says, he'd rather see 1 basis point in cost reduction than 1 basis point in return, because you can predict your costs. You can't predict the markets and what they're going to do. So anytime we see a reduction in fees like that, it's due to the hard work of the asset class heads and their negotiations in fees, especially with our our public markets managers and our real estate managers. Of course, the higher fees go to the private equity managers and also to those hedge fund managers. And real estate is also a higher fee type category. But overall, 51 basis points, pretty extraordinary. So if you can continue, what I'd like to do is get to right there. Thank you. Slide 29. And this is your snapshot in time. Of course, Emily sends these net of fees returns reports to you on a regular basis. So this is not anything new if you've seen it already. But I think, as we say again, back to July 185, as Evie noted, the second system to join print. Weymouth was the first one the year before. But, this just was an extraordinary period of achieving on a net of fees basis, almost 9% return since inception. And you can see again the strong returns across the board. And, you know, like I said, 2020, if you look at that fiscal 21, that's from July to December 31 of 2020, as Francesco noted. That was our second highest 6-month return in Prim's history, dating back to June of 1986. And of course, Needham was part of that as well. So very strong returns. Again, that quarterly return was outstanding. And of course, the month of December was quite strong. And any questions before I go any further? Okay, I'll just wrap up with the last slide here on this slide 30. I know there's a lot of other slides, but that's there for you, for your information. Be happy to address them if you have questions. But I also just wanted to throw in the OPEB funds returns in the State Retiree Benefits Trust Fund. And Evie and I worked on this together a lot of times in the early days of when OPEB liability funds were being created. And of course, Needham was ahead of the curve for many years before all of this. And you had built up quite a fund. I remember, Evie, you and I at a GFOA conference making a joint presentation together to the group. So you've seen your experience here dating back to July 30, 2013, when you came into the OPEB fund. You're currently at $55.4 million and an 8.6% return since inception. Real strong returns across the board here. So again, with some ups and downs, still very strong. It was really a sweet spot to get in 2013. So I'll conclude there and be happy to field any questions that you may have. The three of us are obviously available to take any questions you'd like.
Does anyone have any questions, comments? No? Okay.
Okay.
Well, I wish you a lot of luck. If we don't see you again, I'm sure we'll see you once we get back in person and you'll be wandering around and, you know.
I may have to do a little farewell tour to
Definitely.
throughout the state. I just,
Yeah. Yes.
I just can't get it out of my system.
No, it's
But thank
hard.
you, Evie.
Believe me, it's hard after all these years. It just, you
Oh,
know, it's like your routine is totally interrupted, but I'm
Exactly.
sure you'll get the hang of it. Sure.
I'll try. Thank you so much. I really appreciate it.
Thank
Good
you.
to see you, John. Finally seeing you up there. It's good to see you, sir.
And thank you, Francesco and Emily. We appreciate it. Bye-bye.
Thank you.
Thank you so much. Bye-bye now.
Thanks again, everyone.
Au revoir.
Good luck,
Good
Paul.
luck.
Thank you so much. Thank you very much.
Best to you.
Thank you.
Okay. The minutes of the February board meeting. Do I have any questions or comments? I think I had submitted. I think we're good. Anybody have any questions or comments on it? If not, can I have a motion, please?
Motion to accept.
Mr. Kowalski has a motion to accept. Do I have a second?
Second.
Mr. Morrell seconds. Roll call vote. Mr. Papetti, since I didn't welcome you, I don't think.
Yes, I
Um,
seconded it.
You seconded it or Bob or Mr. Ross? Who
Bob seconded it. Bob
Yes,
Papetti.
I seconded, didn't I?
Okay, Mr. Papetti seconded it. Okay. All right. Roll call vote. Mr. Papetti,
Yes.
Mr. Kowalski,
Yay.
Mr. Ross.
Hold on one second. Let me try to, I think he has to unmute himself. Bob, can you hear us?
Unmute, Bob.
Can you hear me now?
Yep.
Yep. Yep, we're voting on the minutes.
Yep, yes.
Ms. Sincata,
Yes.
and the chair votes yes. Can I get everybody? Okay, the attachment A. Questions or comments on attachment A?
Motion to accept.
I have a motion to accept. Mr. Morales, do I have a second?
Second.
Second. Mr. Kowalski. Roll call vote. Mr. Papetti,
Yes.
Mr. Kowalski,
Yay.
Mr. Morales,
Yes.
Ms. Sincata,
Yes.
chair votes yes. Payroll warrant. $1,157,137.50.
Motion to accept.
I have a motion, Mr. Morales. Do I have a second?
Second.
Mr. Kowalski, second. Roll call vote. Mr. Papetti,
Yes.
Mr. Kowalski,
Yay.
Mr. Morales,
Yes.
Ms. Sincata,
Aye.
and the chair votes yes. Expense warrant. $514,359.93. The bulk of which is the 3/8C payments, which I'm sure everybody is aware of what the 3/8C payments are. They represent retirements for individuals who had worked for the town of Needham, but they would have retired for another system. So we have to pay them a proportionate share of their retirement benefit. And then
This-
in turn, other boards have to pay us for if someone
This is-
need them.
This isn't any money part of the lawsuit, is it?
No, the MTRS bill, I have the invoice, but the people part of the Stoneham case that we're part of are not included in that number.
It just seems like a high number. Motion to accept.
I have a motion to accept. Mr. Morales, do I have a second?
Second.
Mr. Kowalski, roll call vote. Mr. Papetti,
Yes.
Mr. Morales,
Yes.
Mr. Kowalski,
Yay.
Ms. Sincata,
Aye.
and the chair votes yes. Now what? Financial operating statements. Mr. Morales, what do we got?
Well, we're still over the 200 million. I was a little taken back by the presentation this morning because we had no warning that it was coming. It took me a little while to clear the smoke out of this room, but outside of that, you have to understand, just a thought. You think about all the money that Prim gets, not only for, we give them 10 million in July. Multiply that by, what is there, 90 other, and plus what the state gives them. It just dilutes those numbers in my estimation. I just don't believe a word they say. Nonetheless, motion to accept.
I have a motion to accept the financial, the operating statement. Do I have a second?
Second.
Got a second. Roll call, Mr. Papetti,
Yes.
Mr. Kowalski,
Yay.
Mr. Morales,
Yeah.
Ms. Sincata.
Aye.
I believe. I guess we can move. Review the budget.
Did we have a chance to look at the stipend for the treasurer?
That's still in the works.
Okay, budget looks good. Doesn't look like there's anything that's totally out of whack. Anybody have any questions on it? No, everybody good?
Motion to accept.
I don't think we accept the budget.
Okay,
We don't usually vote on the budget.
okay. Withdraw the request.
I mean, it's informational.
Okay,
I'll put a little insert page. I did that for a couple months, but I'll let you know when we get to this section where they're more just notifications to the board.
okay.
Okay, old business. Mr. Cole, Jacob, whatever your name is. Eric audit, where are we with that?
In terms of the post audit for PERAC,
Yeah,
some of the items that they wanted us to look at, Marty and I are still in the process of doing that. We had a lot of end of year activities we had to do. We're still working on the annual statement. We're working on it, but I wanted to prioritize some of the things that are more pressing at this point in time.
okay, so have you gotten the annual report is not completed yet?
No, and it's not due to May, just for the record, but Marty and we have a target date that we want to have it done by the end of March. And I think we can still, do that.
Okay, because I believe that the board had requested we do another actuarial study.
Yep, and
Informational purposes. And I believe that we do have to do an RFP. But I would suggest that we move forward with our current actuary for this informational study. And as soon as we are done, do the RFP so that we have time to make sure that it's completed and all the ducks are in a row and all that stuff. 'Cause I'm really interested to see numbers for 2020 as of 12/30/21 or 1/1/21.
okay, I can request a contract extension from Siegel for that.
Okay. Does anybody have any comments on that or agree?
No, I think it's a good idea. We got to get that thing done.
Right, exactly. So we'll get that done and then we'll worry about the RFP.
Okay, I have a question, just as a matter of business. So you gave us in our packet the first page of the short form agreement with Siegel. And under terms of agreement, there's nothing mentions the extension. Is that on the next page? Or for how many times can we extend?
So to tell you the truth, my understanding is that we've sort of exceeded that already. That's why I'm of the opinion we should be going out to RFP. I also talked to Dave Davison. He said retirement is a little bit separate from the town, so they have a little bit more leeway where you can extend. He said, but you should not extend a contract more than 5 times. So
How far? So this original contract was in 2016 for a period of 3 years. Is that correct?
as far as I can see, I dug up what we have in our file cabinet from prior years. I was looking for the original contract, and
So
Well,
we-
this term of the agreement is supposed to be completed by 2016. So it looks like we would have been 5 years extending this. Correct?
Right.
Okay, so I'm not going to put a wrench in the thing, but I really think that this would be the last time that we would do that. I could, in consciousness, do that.
That's what I'm proposing, Sandy,
Yeah.
that we do this informational study now and then immediately to get the RFP in the works. So
Okay.
that we're really only doing it for one more time.
Yeah, the RFP will be on the street by the end of the year.
Right, and then we have really, if we accept this study, we'll have another 2 years to get it done. If we don't accept this study, then we will have another year to get it done. So I think as soon as we get this study done and the results from them, then we do the RFP, which is basically just about finalized. I think we just have to change some dates and a little bit of the language, but it's for all intents and purposes, it's done. It's ready to go.
Good.
But I don't know that we want to spend the time right now
No,
while it's going on.
I
to
agree.
Go through that. So, okay. So we,
And it should be good timing too, because when I reach out to Lisa with Siegel, by the time she gets me the contract extension and I get all the signatures and so forth, Marty and I should be nearing the wrapping up of our annual statement, which they will need anyhow. So I think we're on a good timetable for, it should all come together okay.
okay. It's not reflected on my agenda, but Mr. Morales' term is coming. Are you done? Is your term up or are you?
I think it's April 21st.
Okay. I would like some input from the board for a motion to consider reappointing Mr. Morales.
Why don't we do that next month?
Bob, are you interested in continuing?
I need some more time to think about it.
Okay, fair. So we'll put it on for the agenda for next month.
Fine.
Okay. Thought that was finalized. Anyway. Any new business?
Yes, I have something.
Yes.
I wanted to say that it's with mixed emotions that I'm telling you that I'm retiring from the town on July 6th. So I serve on this board at the designation of the town manager. And I presume that she will appoint someone else in my stead. But I will still be an active member of the board for the next 3 months. It's been a pleasure to work with you all and learned a lot. We've been through a lot, and I'm really excited to go on to the next stage of my life. So just wanted to let you know now.
Oh, congrats. Can I come?
Is there any
Congratulations.
we-
Congratulations.
time? I'm not one to say goodbye to people. And I know that, you'll stay in touch, but I appreciate really the perspective that you brought to the board. You kind of brought a fresh look on everything, on finances, retirements. You've been honest and straightforward, which has helped me a great deal on this board. So there's plenty of time to say farewell.
Mm-hmm.
So, we'll just keep plugging along. And when we get to that last meeting, well, then it'll really be emotional.
Maybe we'll be in person.
Yeah, I
Oh,
know.
really? That'd be great.
Nice.
Right, because if they said if we all have our 2 shots except for Liz and
Yeah. I mean, even if we have to meet outside, we'll meet under the canopy outside or something. We'll do something. We'll do something.
Sandy, I will miss you because I think you've made a big contribution to us.
thank you, Bob. That means a
And
lot.
I don't think we always see eye to eye, but that's the way it's supposed to be.
Correct. That's right.
Sandy, you always keep us on our toes. That's what I like about you.
Thank you. Thank you. It's been fun working with you all.
Motion to adjourn.
Any other new business?
Yes, can you hear me?
Yep, we can hear you.
Yeah, do we have to do anything with the COLA? I know raising the base is contingent upon the actuarial, but with the fantastic returns and stimulus money and everything, does this have to be on the town meeting docket? Just the regular COLA or?
Well, the regular COLA, we have to notify the moderator within 30 days, I think.
That's correct.
We could take that up next. Well, do we notify him before or after the vote?
Before.
Before. So I think he should be notified. It probably won't be enough time to vote it at the next meeting, but you could vote it at the following meeting night. Is
Right.
that, yeah?
The
important thing is to notify the moderator.
Well, it has to be posted that we are going to be having a hearing on the
Okay.
cost of living increase. And it
Okay,
has to be posted 30 days in advance,
okay.
so that the public, so that the members of the retirement system are aware. So it's
So,
posted as part of the agenda.
You,
The meeting.
okay, but is that the same posting we give the moderator? I'm confused.
Now you got me confused.
last year, I believe his name is Michael. I did notify him. I just forget some of the timeline, but what if I notified him today to put on the agenda for the April meeting?
It could be a May meeting. Doesn't, I think
Yeah.
it's May. I think May would be,
Yeah, it has to be done by June 30th.
that's right,
Get on the July.
right. So I think the May meeting,
So I think there's plenty of time,
yeah, I think the May meeting is,
but notify him anyway.
So
Yeah,
it's not something that goes into town meeting anywhere along like,
No,
no. Mm-mm.
to increase the base has to go to town meeting.
oh, okay,
Right, that's what it is, Bob, thank you.
which we should work on.
To increase the base, you gotta go to the selectmen, you gotta go to the finance committee, and you gotta go to town meeting.
Yeah.
And that's something that Evelyn and I have lived through once.
That's right.
It wasn't easy.
No,
Oh, is that when you went from 12 to 14?
Yes.
no, it wasn't easy.
What is easy, really?
Yeah.
It was worth it, but it wasn't easy.
No. Okay, do I have anything else? Okay, we have a motion to adjourn.
So moved.
Mr. Burrows, second. Do I have a second?
Second,
Mr. Kowicki, Mr. Papetti,
Yes.
Mr. Burrows,
Yes.
Mr. Kowicki,
yay.
Ms. Sincata,
Hi.
chair votes yes. Thanks, everybody.
Thank you.
Okay, bye.
Thank you.
Bye.
Sandy,
Yeah.
although we'll be sad, I'm sure your labs, because I know when I go to see my brother, they go nuts when they see me. I bring them tennis balls and they're like, Jake is here. And
Oh, they have so much fun. Oh my God.
yeah, so they're gonna love you
Yeah.
around more, so.
I know. Right now, they stand at the bottom of the stairs from my office and they cry because they can't get up the stairs because there's no carpet. So, yeah.
Alrighty, well, you guys, and then you and I can talk offline, not necessarily today, but we'll have to get some things in order for you, of course, so.
Yeah. I need,
Um,
I'm just so buried right now. So, all
Yeah, no, I'll wait until you
Okay.
come to me, so.
right. Thanks.
All right, you guys have a good
Yeah.
day.
Okay. Bye.
Bye-bye.
All right,
Bye.
Yep.
Bye-bye.
We'll end this meeting.